Hi, Tom Isaac here, and we're going to go through the last worksheet in the Personal Life Map Portfolio project, and that's worksheet 4. This is investment for retirement. So these are assets that you're going to be putting aside for your retirement. They are also referred to as tax deferred investments, and that's because you generally don't pay any taxes on the income that you earn on these investments. At least until retirement, depending upon what kind of investment they are. That also means generally that you can't use them before retirement, except under certain circumstances. So this is a relatively straightforward worksheet. We're not doing a lot of work on exactly what you should be investing in, only looking at how much you're planning on investing. So this worksheet has a couple of sections to it, and we'll go through them one by one. As always, make sure that you read the directions at the top of the worksheet before you start. Now, as you go along, you're going to start at section 1, and it asks you a couple of questions about individual retirement accounts. So you're going to put in your age at the start of year 1. So that would be your age basically at graduation from Point Park. So let's say I put in 23 years old. And then you're going to have to do research on what is the maximum allowable contribution to an individual retirement account at your age at the start of year 1. So you're going to have to go out and find out what that is. Should be a relatively easy search to be able to find that out. Just pay attention to what year that is. Now, if you're graduating 3 years from now, you're probably not going to be able to find out what the maximum allowable contribution is 3 years from now, but you're going to want to make sure that you at least put down what the current maximum allowable contribution is for this year. Sometimes if you just do a quick search and you don't pay attention, it might be the amount that was allowable 2 or 3 years ago. So make sure that you read carefully about what the source is. So last year, for example, it was $6,000, and I could put that in there. And then down here, I would cite my source. So I'd put down where I got that information from, just so that if it comes up something that's incorrect, we'll know what that source was and be able to track that down. Now, once I put that in, I'm going to look at investing in 3 different parts. So part 2 is for my contributions out of my cash flow for an individual retirement account. So this is an account that I own in my name for funds that I'm setting aside for retirement. The next part, in part 3, is money that I set aside in my employer's sponsored retirement account. So this would be like a 401k for a for-profit corporation, or if you work for a university, this might be in some type of like TIA-CREF type of fund, or if you work for a municipality or a school district, it might be a 403b. But these are things that your employer runs. They're not an individual investment that you make in an investment company. And then the fourth part doesn't come from your cash flow. So it is common, although not everywhere, that your employer may choose to match some portion of your contribution to an employer sponsored retirement account and match some portion of that for you. So if you invest $1,000 in your employer sponsored retirement account, your employer may turn around and match that as well and put $1,000 in there for you from their money. So this doesn't come out of your cash flow. This is money from your employer. Now, it usually does come with some strings attached. So, for example, it's pretty common that if your employer matches your contribution to their 401k, you might take several years before you actually get that money. That's called vesting. And so the employer may say, you put in 1,000, we'll put in 1,000. And in 4 years, that's yours. That if you walk away after 4 years, you can take that money and transfer it to another employer sponsored retirement account or put it into an IRA. But if you leave before 4 years, you don't get to take that with you. That's, again, called vesting. So let's go through on how to complete these sections. So in the individual retirement account, I'm going to make a decision about what do I want to do. Do I want to deposit something monthly, weekly, or yearly? So I'm going to turn around and say I'm going to deposit uh, $1,000 a month. And you'll see what happens is this comes up and it doesn't allow me to do that. And it puts a red line through here because it says my contribution has exceeded the maximum allowed for my age. So at age 23, the maximum which I could contribute is, say, $6,000. So I'm going to have to change this to $500 a month. And you can see that's now white instead of red, and that's within the maximum allowable contribution. The other thing that you're going to put down in here is what type of individual retirement account do you have? Do you want to do a Roth IRA or a traditional IRA? I'm not going to explain the differences here. There's nothing in this that makes any difference to your worksheet, but I want to make sure that you've thought through this decision. You'll be able to learn about Roth IRAs versus traditional IRAs in your reading. And so make sure that you have read the material in the textbook so that you can make a good decision here. The next part about periodic contributions to your employer-sponsored retirement account. Generally, this would be something that you would do at the same rate in which you get paid. So I might say, okay, so for my employer-sponsored, I'm going to put in $1,000 a month into that, totals $12,000. And then you can see the total contribution that comes out of my cash flow is going to be $18,000. And this comes from my money into the individual retirement account and the employer-sponsored retirement account. Now, if back in worksheet 4, you put in an income in my, say, annual salary from employment, and so if I plan to make $50,000 in year 1, then I can come over here and I'll put that in my retirement account. You'll see there's the $50,000 base salary. And there's a link here to worksheet 4 if you want to be able to do that. Now, I can put the percentage of my base salary in that my employer is going to match. And most employers, all employers, are going to limit how much they're going to match. So you may say, hey, I'm going to put in $12,000 of my $50,000 a year in income into my retirement account that you're managing for me. Your employer is not going to do that. They're going to match up to some percentage. So some employers may match 1% or 2%, maybe up to 5%. There are a few odd employers that maybe they'll match 6 or 7 or 8%, but typically between about 1% to 5%. So what you want to do is to look at, for the industry that you're planning on working in, are you able to find out what a typical employer in that industry is going to tend to provide? So I'm going to put in 4%, and you'll see 4% of $50,000 gives me $2,000 of money that goes into my retirement, but that $2,000 does not come out of my cash flow. So that's an important distinction. That's all there is to worksheet 14. So a couple of things you need to check on. What is the maximum allowable contribution? Cite your source there. Think about whether or not I'm going to do this in an IRA, a traditional IRA, or a Roth IRA. You're going to have to pick one or the other. You can't pick both. And think about how much I would want to contribute monthly out of my cash flow to my retirement, both individually and my employer-sponsored account. And then lastly, of course, you're going to have to check on, does my industry that I'm planning and working in, do they actually offer employer-sponsored retirement accounts? Is that a common thing in this industry? And if they do they match or not? Not all employers do. So if your employer doesn't match, you just put in 0 here. If your employers or the typical employer in that industry does match, see if you can find out approximately what kind of matching rate that they do. Again, I hope this is helpful for you completing this worksheet. As always, if you have any questions, reach out to your instructor. Thank you.